Acha, this is your teacher Haris Bhatt and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from Schedule of Non-Current Assets along with accounting ratios. This question has come in which you have to prepare Schedule of Non-Current Assets with some part of accounting ratios also, right? And we are studying A2 accounting and we are doing the topic of company accounts in which we are going for Schedule of Non-Current Assets and some part of ratios we are doing. So let's see how we are going to go for this particular goings. तो देखिए सबसे पहले source V from question number 2. This question has come in October, November 24, 31. October, November 24, 31 is the variant. T Public Limited Company is a business which occupies rental premises. It has only two types of non-current assets. It provided the following information about carrying values of these two assets. So remember this, these are the values which are given. They are carrying values. Carrying values means after depreciation. So machinery, for machinery is it is 151500, and for in 2022 at the end of 2022 and at the end of 2023 it is 217250. For motor vehicle 25600 is given, and for motor vehicle the ending value we need to find it out because it is not given. So we need to calculate it. So let's see. The company also provided the following additional information. Depreciation is calculated as follows. Machinery rate per annum 10% straight line. Motor vehicle 20% reducing balance method. Depreciation is calculated in accordance with the months of ownership. That is very important. That months of ownership, it is very important. Yani month to month basis, you have to calculate depreciation according to month to month basis. So that is very important. Number 2, T Public Limited Company operates 2 machines and 1 vehicle. Machine A was bought for 90,000 on 1st July 2019. The machine B was bought on 1st October 2020. And the vehicle was bought for 40,000 on 1st January 2021. Machine A was sold on 1st February 2023. And on that particular day, machine C was bought on the same date for a price of 1,50,000. So we have bought machine C for a price of 1,50,000. So we'll see that how we will go on with this particular question. On 31st December 2023, after the depreciation for the year had been provided, an impairment review indicated that there was an impairment loss of 2480 on the vehicle. So there was an impairment loss of 2480 on the vehicle. Remember this, that we have only one vehicle of 40,000 and the same vehicle is going to be impaired and the impairment loss is 2480. Let's go for the question. Calculated 31st December 2022, the cumulative depreciation on machine A. So I need to find the depreciation, total depreciation on machine A. So let's do that. I need to find total depreciation on machine A. So let's find it out. The machine A was bought on 90,000 on 1st July 2019. So it is supposed to be depreciated. The rate of depreciation is 10%. And it has been used from 1st July to 31st December in 2019. So that is basically for how many months? For 6 months. So 90,000 into 10% into 6/12 will calculate the depreciation for 2019. Then again, it is going to be depreciated because the examiner has asked us to find accumulated depreciation, total depreciation from the date of purchase till 2022. So 90,000 into 10%. The answer is going to be 9,000. Then again in 2021, it is going to be depreciated. 90,000 multiplied by 10%. Again, it is going to be 9,000. And in 2022, we will depreciate it again because straight line method is used. So I will calculate depreciation under the straight line method at the rate of 10% on cost, which is again 9,000. So the total depreciation on this is going to be 31,500. So total depreciation to date on vehicle A is going to be 31,500. Okay, now let's go for the next part of the question at what we have been asked to find. the carrying value of machine B. Carrying value means the book value of machine B. After depreciation, we need to find the book value of machine B. Machine B was bought on 1st October 2020. Right? It means that machine A has already been bought at that time. And machine B was bought on 1st October 2020. And we need to find the carrying value of machine B on which date? Let me see. We need to find the carrying value on 31st December 2022. So let's calculate the carrying value of machine B. Why, sir? Because remember this, that the carrying value is already given in the question. Yes. It is bought on 1st October. Obviously, it has been used for October, November, December for 3 months, and then again for the whole year and again for the whole year. But we don't have the cost of machine B. But we have that at 31st December 2022, the carrying value of both the machines A and B is 151500. So total carrying value, let me write it down. Carrying value of both machine A and machine B, machine A and machine B at 31st 12/2022 is going to be how much? That is given in the question. Let me show you. That is 151500. Okay, 151500. That is the carrying value of machine B. If I will subtract out of this, I will subtract the carrying value of machine A. I will get the answer. But I need to find the carrying value of machine A on 31st December 2022. So the carrying value of machine A at that time is 90,000 minus the total depreciation till 31st December 2022. So the carrying value of machine A is how much? 90,000 minus 31,500. What is the amount? That is 58,500. Now 151500 minus 58,500, you will get the carrying amount of machine B, which is 93,000. Obviously, it is a tough part. Why? Because in the first part, the examiner has asked us to find the total depreciation on machine A for 2019 for 6 months, then 20, 21, 22 for the whole year, 31,500. I can find the book value of machine A. 90,000 is the cost, minus total depreciation to date, 31,500. 58,500 is the carrying amount of machine A on 31st December 2022. I want to find the carrying value of machine B. It's very simple because we have only two machines, A and B. So the carrying value, total carrying value of machine A and B on 31st December 2022 is 151500 minus the carrying value of machine A on 31st December 2022 is 58,500. So we can get the carrying value of machine B, that is 93,000. Carrying value of machine B is 93,000. So how did you find the carrying value? Here it is given. On 31st December 2022, total carrying value of machine A and B is 15,100, where the machine A cost 90,000 and its carrying value was 58,500. I have subtracted that. I got the carrying value of machine B at the end of 31st, 2022. Now, let's move forward. What is going to be the next part of the question? The original cost of machine B. We have to find now the original cost of machine B. We have only the carrying value of 93,000. But you remember that if you just see the question, it is clearly stated that the machine B was bought on 1st October 2022, right? And the rate of depreciation for machinery is 10%. Okay. So it means that because the machine B is purchased on 1st October 2022, 2020, pardon. At what price it has been purchased, we don't know. We don't know. But it has been purchased on 1st October 2020, right? And it means that it is used for 3 months. 3 months, right? Then it is used for 1 year, and then again it is used for 1 year. And the depreciation rate is 10%. So 3 months means 3 over 12. 3 over 12 means 1 quarter. 1 quarter means 1 over 4. So if the depreciation rate is 10% for 12 months, the depreciation rate is 2.5% for 3 months, 2.5%. So that is going to be 2.5% in the first year. It will depreciate. Then in 2021, it will depreciate by 10%. Then again, it will depreciate by 10% in 2022. So the total depreciation which should have been charged is 22.5%, which is going to be 0.225. So now I can do that from 100%, the asset has been depreciated by 22.5%. So the remaining value is going to be 77.5%, which is going to be 0.775. So it means that this 93,000 is equal to 0.775 of the cost of machine B. So I can find the cost of machine B by going reverse. That is 93,000 divided by 0.775. We will get the answer. That is the cost of machine B. That is going to be 1,20,000. So this is how we have found the cost of machine B. That is going to be 1,20,000. Sir, it is very difficult. Please explain it again. Okay, let me explain it again for you. Number one is this, that first two parts, we have found the total depreciation on machine A. We subtracted the total depreciation from cost to get the net book value, which is 58,500. Carrying amount भी कह सकते हैं आप. Then total carrying amount at 31st December, including A and B, is given 151,500. उसमें से मैंने मशीन A की carrying amount minus कर दी, तो मेरे पास मशीन B की carrying amount आ गई 93,000. That is on 31st December 2022. But the machine has been purchased, B machine has been purchased on 1st October 2020. So it has been depreciated under straight line method. Obviously, 2021 में 10% depreciation charge हुई, 22 में भी 10% depreciation charge हुई. That is very simple. But in 2020, because month-to-month basis, the depreciation should be charged for only 3 over 12, 1 quarter. And 1 quarter is basically 2.5%. 0.25, 1 quarter. You can calculate 0.25. So 0.25 plus 0.1 plus 0.1, you will get 0.225. 1 minus 0.225 is going to be 0.775. So now the 93,000 is equal to 0.775 after subtracting 22.5%. It is now 77.5% of the cost of the asset. So 93,000 divided by 0.775, we got the original cost of the asset, that is 1,20,000. Hopefully you got the point. Now we'll move forward to prepare the schedule of non-current assets. So let's do that, because next part is he wanted us to prepare the schedule of non-current assets. Prepare the schedule of non-current assets. So let's do that. And it is not that difficult also. So I'll open another. So there are two assets, plant and machinery and motor vehicle. So I have to prepare the schedule of non-current assets for the two assets, plant and machinery, and I'm going to go for also for motor vehicle. And because in the answer, it is total column is also required, so I'm going for the total column also. So first of all, I will write cost at 1/1/2023. Yes, because we are supposed to prepare the schedule of non-current asset for 2023. So I have to write cost at 1/1/2023. That is very simple. For plant and machinery, the cost of machine A is 90,000. It is still with you. And the cost of machine B is 120,000. It is still with you. Cost. So the total cost of plant and machinery is 2,10,000. Now I will go for the addition. Or purchase you can write. Then I will go for the revaluation if there is any. Then I will go for the disposal, the asset which has been sold, if sold, the cost of asset. And last I will going to write the cost at 31st 12/23. Then we are going to have depreciation and impairment. Yes, we will write both together, depreciation and impairment, and I will discuss that afterwards. First of all, let's see that either we have purchased any machinery. Yes, machine A was sold on 1st February 2023. It means that it is sold in 2023, and machine C was bought on the same date for 1,50,000. So I can write addition, that is 1,50,000, because this is prepared with the cost of the asset purchased and credited with the cost of the asset sold, and disposal will come. Machine A has been sold, so I will subtract it the cost of the asset. That is going to be 90,000. Debited with the cost of the asset and credited with the cost of the asset sold. So 2,10,000 plus 1,50,000 minus 90,000. So the cost will be 2,70,000. So I will write here 70,000. Now I'm going to write the depreciation and impairment. So for over here, first of all, I have to write the depreciation at 1,123. Then I will write charge for the year, whatever charge depreciation you want to charge, any current year depreciation. Then here comes the impairment, if there is any. Disposal you can write first, okay? And then there is going to be the impairment loss. You can write here. And then you can write the depreciation at 31st, 12, 23. Well, let me calculate it. So first of all, I need to write the depreciation at 1st January 2023, which is not that difficult because we have already calculated that and we can calculate it even more. How come, sir? See, the depreciation which we have calculated, we know that the total depreciation till 31st December 2022, which we need actually, on machine A is 31,500, right? And on machine B, we can easily calculate the depreciation also. How come? 1 lakh, I think machine, yes, 1,20,000 minus 93,000. So what is going to be the amount? Can you calculate it with me? 93,700. That is 27,000. Now 27,000 plus 31,500, that is going to be the total depreciation at the start of 2023, because machine A has been depreciated in the last 4 years for 31,500 at the start of 2023, and machine B we have calculated 27,000. Total is basically 58,500. Depreciation at start is 58,500. Okay. Now charge for the year. We'll discuss this later on. Disposal. The asset which has been sold, we need to dispose of that asset and we need to calculate the total depreciation on the asset sold from the date of purchase to the date of sale, and we need to subtract it. We already knew that the asset of 90,000 has already been used for how many months? From 2019, June, July, till 31st December 2022, and the depreciation is 31,500. But that asset is sold basically on 1st February, not on at the start of 2023. So 1 month has already been used again. Because it is month-to-month basis, so we have to calculate depreciation on the cost of 90,000 of the asset for 1 month also. So 31,500 plus, in order to calculate total depreciation, 90,000 into 10% into 1/12. Why? Because we know that we are going for month-to-month basis. So 1/12, I will calculate. So the answer is going to be 750. I think so. That is 750. I can't say with complete prediction. I want that you can do that also along with me. So the total is going to be 32250. And I will subtract that 32250 because the disposal we need to subtract. As the cost has been subtracted, the value of asset sold from the date of purchase, depreciation on the asset sold from the date of purchase till the date of sale is supposed to be subtracted. So I subtracted disposal 32250. Then now I have to calculate the depreciation charge for the year. So charge for the year, it is very easy. Number one is this, that 750. The machine A has been depreciated by 750. Then we have machine B. It is with us. So it is going to be depreciated by 10%. Yes, for the whole year. It is not sold. 12,000 we will depreciate on this. And then we have a new asset which is purchased on 1st February for a price of 1,50,000 into 10% depreciation rate into 11/12. Why? Because it is supposed to be depreciated for 11 months. Why, sir? Let me show you why. Because on 1st February, the machine A was sold, so it is depreciated for 1 month. And for the next 11 months, machine C was bought on the same date, so it is going to be depreciated for 11 months. Okay, from February till the end of end of the year, because we are going for month-to-month basis. So what is the amount if you calculate? It means that I want to know that what is the amount of depreciation on 1,50,000 asset. That is going to be, let me calculate, 13,750. Okay, so that is going to be here 13,750. You can calculate also. Now the total is going to be 26,500, which is basically the charge for the year. Charge for the year we have calculated. Now I can write the depreciation at 31st/12/2000, and that will be going to be 52,750. Now you can write the net book value. You can write the net book value. Net book value at 31/12/22 and the net book value. This is how we used to write it at 31st/12/23. So on 31st/12/22, that is 2,10,000 minus 58,500. That will remain the same, like 1,515,000. And for net book value at 31st/12, I will subtract 2,70,000 minus 52,750. So that is 217,250. 217,250. So we are done with that. Now we'll move toward the motor vehicle, which is quite easy. That is going to be 40,000 is the cost. There is no addition, there is no devaluation, there is no sold. So 40,000 will be the cost of the asset. Now let's move back. Motor vehicle is depreciated by 20% under reducing balance method, and the vehicle was bought on 40,000 on 1st January 2021. So till 2022, end of 2 years have passed. So the asset has been depreciated by 2 years. So we can calculate the depreciation. We can write the, the book value also. Book value means, I mean to say, the total depreciation till date, till the 2 years, till after 2 years. So that is going to be 40,000 multiplied by 20%. That is going to be 8,000. Then again, 40,000 minus 8,000, that is going to be 32,000 into 20%. That is going to be 6,400. So the total depreciation, or the depreciation at the start of 2023, accumulated depreciation at the start of 2023 is 14,400. So I've written it down, and it is quite easy also. Then there is no disposal, but there is impairment. Remember that you don't need to subtract the cost of the asset from the motor vehicle or the depreciation on this asset which is going to be impaired. Only the impairment loss will be written, and you need to calculate that impairment loss. That is 2,480, which is given in the question. We don't need to calculate it over here. Sir, how come? See, let me show you. After the depreciation for the year had been provided, the impairment review indicated there was an impairment loss of 2,480 on the vehicle. So I just write the impairment loss as expense in the impairment loss, like profit and loss account figure, in the positive sign, like depreciation brought down at 2,480. And now I'm going to write the charge for the year. What is impairment loss? Higher impairment loss is the reduction in the value of asset by which the recoverable amount is more than the carrying amount is more than the recoverable amount. So carrying amount is 40,000 minus 14,400. Now the recoverable amount, I don't know. But definitely carrying amount was higher by 2,480. So we have impairment loss of 2,480, which we have written. as an expense or whatever you can show. Now I have to calculate the charge for the year. The impairment loss has occurred after the charge for the year. So charge for the year, I can calculate 40,000 minus 14,400 because there is a reducing balance method and multiplied by 20%. So the answer is 5120. So I can write here 5120. That is going to be the charge for the year. Please calculate it for me. So I don't think so. Okay, I should get it wrong. I hope that I have solved it right. But still, you can see that if it is wrong or right. Now I can find the total value of the depreciation, like here, that is going to be 22,000. Here, the net book value at 31st 12 was 25,600. It is given. You can do that also. 40,000 minus 14,400 and 40,000 minus 22,000 is going to be 18,000. So we are done with that. I hope that you can go for the total column by yourself, because that is not going to be easy for you. It's not going to be difficult. Total column you can prepare by your own. Is the total column is required? I believe it should have been required. Otherwise, let me see. Depreciation, schedule of non-current asset. They didn't ask us though, but it's always better to go for the total column because it is a part of the story that you need to go for the total column also, right? So you can do that on your own. I move forward to the next part. The director used ratio analysis to assess performance. Name the efficiency ratio which would be affected by the outcome of the impairment review. That is non-current asset turnover ratio. Sales over non-current assets, because non-current asset has been gone down. So efficiency ratio, non-current asset turnover ratio is going to be affected. Revenue for the year is 31st December 322500. Asset and liabilities are given. The director calculate ratios using year-end balance. They are now considering using average figure in future. Calculate the net working asset to revenue ratio for 31st December 2023 using year-end balances. So the formula is very simple for the ratios, and we can find it. Net working asset is basically inventory at the end, inventory turnover ratio, which we can calculate. Net working assets. Net working assets are, which does include, net working assets includes inventory, then it includes trade receivables, and then it includes inventory at the end is 112,000 plus trade receivables 48,000 minus trade payables 31,000 divided by sales. Sales figure is given, that is 322,500. Oh, sorry. 322,500 and multiplied by 100. That is going to be your net working asset to revenue ratio. The formula is net working asset to revenue ratio. This is the formula. सर ये तो पहली बार सुन रहे हैं हम, बेटा क्या करें, यहाँ पे कोर्स का हिस्सा है, बहुत कम आया हुआ है, 2-3 दफा आया हुआ है। नेट वर्किंग एसेट्स का मतलब क्या है, आपने निकाली हुई ना वर्किंग कैपिटल साइकिल, उसी से ये है नेट वर्किंग एसेट। इन्वेंट्री प्लस ट्रेड रिसीवेबल माइनस ट्रेड पेबल ओवर सेल्स into 100, तो 40% is the net working asset to sales ratio. By utilizing ending balances, inventory, trade receivable, and trade payable, we are not using average figures. Assess the effect the change in formula would have on the company's net working asset to revenue ratio. Calculations are not required. Obviously, if you go with the average figure, the net working assets will decrease. It means that net working assets, you are getting more sales by utilizing net working assets. So it means that you are basically getting more sales by utilizing your net working assets, because when you do the average, obviously the net working assets will decrease overall because of the inventory, because inventory is higher, but the opening inventory was lower. The net working ratio will increase actually. 100% will increase, that you are generating more, what should I say, in comparison to revenue. Calculations are not required. I hope so that it will decrease, I believe, rather, right? So it means it will decrease, that you are basically using less current assets, net working assets, and you are getting more sales. So the ratio will decrease basically. Perceived performance of the company I've already discussed with you. Advise the director whether or not they should use average figures when calculating the net working asset to revenue ratio in future. Justify your answer. Obviously, average balances are more favorable because it gives a more accurate figures while calculating the net working asset to revenue ratio. Average figures are more accurate. Average figures, sir, what do you mean by average figures? Okay, let me show you. Average figure means the opening inventory plus closing inventory divided by 2. This is how you take. Opening trade receivable plus closing trade receivable divided by 2. This is how you will take it. Okay. So net working ratio, average value would be lower and the net working ratio will be lower. But it means that we are generating more sales by utilizing net ratio. So what we perceive, the business will look more efficient, require few net working assets by generating more sales. This is what they do. Now advice, sales usually takes place throughout the year, right? Not at the year end. So obviously average figures will be more favorable, right? So average figures are discussing only about the opening and closing. So if average was used, this would be more appropriate because it gives a more adequate comparison of the use of net working assets throughout the year. How can we assess that change has taken place? Because changes in calculation would not have any effect on actual performance.